For more insights, let's cross to Dubai, and our guest Jameel Ahmad, the Vice President of Market Research, FXTM, joins us there. Jameel, always good to have you with us. So how will the Syria situation affect commodity prices, or it has faded?
Thank you very much for having me. It's always a pleasure for FXTM to contribute. So the Syria impact and what impact it's had on the price of oil is actually quite an interesting market reaction. So if you look at WTI oil, you see that the oil prices are up 8% this week and now 10% this year. Now, of course, this suggests that the news of airstrikes over the weekend on Syria has increased buying sentiment towards the oil markets. Oil prices are now at their highest level since the historic nosedive of November 2014. So what I think has happened is that investors have priced in some increased geopolitical risk premium. However, if you look at the greater circumstance, Syria actually location-wise is quite a risk for the oil markets. However, Syria is not a major oil producer itself, it's its neighbouring countries. Therefore, it suggests that investors have actually used this news of the airstrikes in Syria as a reason to buy oil. There are other factors at play as well. For example, global economic optimism is at highs that we've not seen since the great financial crisis of 2007, and there's a lot of optimism over the world economy, which is increasing demand for the oil markets. So there's a couple of different factors at play here, and that's why oil markets are now at the highest level in nearly 4 years.
Right, and I mean, those crude oil production cuts led by OPEC were put in place when oil prices were under 50. Now the price has gone up by 50% to $75 a barrel. Do you think the cut would continue, and what factors will influence it?
This is a great question to ask, actually. So the OPEC committee and its commitment towards production cuts is just another reason why the oil prices have hit these milestone highs. So basically, the OPEC committee and its non-committee members who are part of this partnership are very committed towards reducing the oversupply in the market. So as the oversupply reduces and demand increases, it increases buying sentiment towards the oil markets. Now, although the price of oil is approaching $70 WTI and at its highest levels since November 2014, we are still quite significantly below the peak of the oil markets earlier in 2014, which is around $110, $115. So the prices have not quite recovered yet, and this suggests that OPEC will remain committed towards cutting production, and they will try to encourage the buying sentiment for the oil markets to improve.
All right. Do you expect the oil prices to go really up to the 110 level until the cut finishes?
It would be very positive for the oil producers. Never say never in finance. However, there's still a couple of other factors you need to look at. There is still some sort of an oversupply in the market, which means that these commitment towards production cuts have to continue from the OPEC side.
Right.
One of the reasons why there was an historic downfall in the price of oil was because of increased production from US shale and drilling in the United States. So if this improved sentiment towards the oil markets leads to increased production from the United States, who are not part of this committee and commitment to limit their own production, this would actually increase some selling pressure on the oil markets, and it would prevent the price of oil from reaching those highs that we've just mentioned, $100, $110. At the moment, it looks like oil will approach $70, possibly $80 over the coming weeks and months. However, this does, of course, depend on any news flow from OPEC, any geopolitical risks, and also what US shale do with their own production in the United States.
Right. Lovely to talk to you, Jameel Ahmad in Dubai.